So there are 11 sectors in the stock market, and a sector is a broad spectrum look at a certain type or area of industry. And in this video, I want to get into the materials sector. It's one of these sectors that I want to make sure that I have a proper balance in with all the other sectors. And there's some things there's some stocks, positions that I own in this sector that I want to sell, and there's some that I want to buy more of. And so I'm going to get into which ones I'm selling, which ones I'm buying, and which ones I'm going to keep on my watch list. So stay tuned to the end as we discuss the materials sector of the stock market, especially as it pertains to dividend investing. Welcome to the channel. My name is Paris Clough, and this is Financial Self-Reliance. I'm absolutely excited to help you manage, protect, and grow your money. One of my favorite ways to grow my money is through dividend investing. And dividend investing is something that I love to do. I do it in my Webull portfolio. Webull right now has a promotion going on that if you click the link in the description below and you open up an account, deposit $100, they will give you some free stocks. So definitely take advantage of the free stocks from Webull.com. So one of my goals, as I've shared with you before in other videos, is to build up each of my positions to 100 shares so that I can make additional premiums selling covered calls. It's an absolutely incredible opportunity to make even more money on your dividend stocks. And it's something that's actually been very popular, and it's something that's widely done by a lot of people who are into dividend investing and want to make even more money. And so I'll be doing videos once I get my portfolio down to the top stocks that I'm going to be doing these covered calls on. I'm going to start doing videos on how to do covered calls in order to make more premium and more money. So make sure you subscribe to the channel so that you don't miss any of those videos when they start coming out, because you're not going to want to miss them. I'm telling you, building up a dividend portfolio with 100 shares of a position that you can then do covered calls on, it's money. It's money. Definitely worth sticking around, subscribing, and making sure that you're part of it. So when it comes out, you're ready to go. So let's take a look at this. The 6 positions that I hold right now is BHP, LYB, MATV, MSB, Rio, and SXC. So over here this is the materials sectors. You can see these are all the positions that I own. Red here means that there's some loss. Pretty much down in this whole sector right now. The only one that's up right now is SXC, and I hold 10 positions, 10 shares of that. So let's go over here to the Webull, the dividend tracker, my Webull portfolio. Once again, check out Webull in the description below. But this particular portfolio gives me the opportunity to check in on the grade. I can look at the dividend grade. So let's take a look at each of the different stocks that I have here. The first one is BHP, and that's got a 58 out of 100 dividend grade, so it's pretty good. And it's got a 13% yield. That's nothing to shake a stick at, and it's 9 years of dividend streak. So let's see what Seeking Alpha has to say. Seeking Alpha says that BHP is trading right now at $52.74, pardon me. On the 52-week range, that's on the bottom end of it, so it's definitely a steal right now, definitely a good buy. Dividends here, as you can see on Seeking Alpha, it shows that dividend safety is a D-, dividend growth is a C, dividend yield is an A+, is of course with a 11%. Over here on Seeking Alpha it says 11%, but with a dividend yield like that, it's definitely going to be an A+. But dividend consistency is a C-. They have 5 years of dividend growth, 45% 5-year CAGR, and no payout ratio listed here, so I'm not sure what's going on there. They pay semi-annually or twice a year, so every 6 months you're going to get a dividend from this company. I chose to keep BHP on my watch list, so I sold my position and put it on my watch list because I definitely want to buy more of it as time goes on. But I just was some of these other things here that you'll see some of the other positions that I decided to keep are just better. They're just better for what I want to do with my portfolio and how I want to manage my particular my positions in my portfolio, my material sector. So the next one here is LYB. This is a 74 out of 100, so they got a much better dividend grade, and that's kind of a golf score. They take a look at all the different things that are going on. Let's see a dividend breakdown. So they look at dividend payout, free cash flow, dividend growth, debt to EBITDA. Dividend yield, dividend growth, current ratios, earnings per share. So they look at a lot of things to get that dividend grade. So it's really valuable to know kind of what that whole overall look is and the dividend grade. So 74 out of 100 is actually really good. And over here on Seeking Alpha, they're coming in with a dividend safety of B+, dividend growth of A+, dividend yield of A, dividend consistency of B-. So their yield is 5.48. 5.48. That's a fantastic yield. Payout ratio is 25. Plenty of room for growth. 5-year growth rate's not the best, but it's a positive number, which is good for me. Dividend growth, 7 years of dividend growth. That's actually really good. They pay out quarterly. Right now it's $1.19 per share. I actually ended up picking up, I had 3, as you can see over here in my Webull I had 3 shares. I ended up buying 2 more, so I rounded it off at 5. And so I'll be updating my spreadsheet at the end of this video. The next one I wanted to look at was SWM. Now SWM changed, I believe, and to MATV. And I only found that out because I'm looking through my portfolio on Webull and I thought, what is MATV? And so I looked it up, and sure enough, it's the same symbol here. So I think that MATV and SWM merged somehow, but I'm not entirely sure how that all worked out. I'm trying to scroll down here to see what's going on in the notes in the news, but I didn't do that soon enough to be able to give you some really positive information about that. So I did look up SWM on Seeking Alpha, and it did not exist. It was a whole different company, but I looked up MATV, and it was there. So I'm thinking the MATV bought SWM and or merged into them, and so now it's MATV. So fantastic dividend yield, 8.24%. Dividend safety is a B-, dividend growth C+, dividend yield is NA, dividend consistency is a B, so it's pretty good. Payout ratio is 59%, which is good. 5-year growth rate is 1%. It's a positive number. That's positive. Dividend growth in years is 0. I actually ended up selling my MATV, my holdings there, and using that money to purchase another stock that I'm going to talk about at the very end. So anyways, the next one I want to take a look at here is MSB, or Masabi Trust. They have a 31 out of 100 dividend grade, so not that great. All right, so let's take a look at Seeking Alpha with MSB. MSB, Masabi Trust, is coming in at 28.67. It's a 52-week range that puts it kind of right in the middle, the lower end of the 52-week range, so it's not so much of a discount as it used to be. But the dividends here, interestingly enough, say NA. There's nothing here about the score of the dividend, so that kind of made me a little nervous. I really love the dividend yield, and as I've shared with you in other videos, one of the main reasons why I picked some of the dividends that I have was only for the yield. Like, I saw huge yield numbers, and I'm like, buy it, just go, just get a few shares just to kind of build my portfolio. I had almost 100 shares. Pardon me, I had almost 100 positions of different companies that were in this high dividend yield, and I only bought like a few shares of each one so that I had because I was trying to diversify. What I realized though is that I should have bought fewer positions but more shares, and really kind of diversified into still diversified into the sectors, but doing it with fewer positions and more shares, so that I could have a little bit less of a headache in determining and following along and keeping track and keeping up to date on all the information that's coming out on all the different positions. When you have a dividend portfolio that's got 100 different positions in it, it's hard to keep track of who's doing what, what's going on, who's merging with who, and all that other stuff. So that's why I feel like I want to consolidate down to a couple shares, couple positions in each sector, and then I want to really build up my positions so that I can start doing covered calls. So this is a dividend yield of 14.57%, really a good dividend yield. They pay quarterly, 1 year of dividend growth, 34% growth rate. So they have a really good performance, but I decided to sell them so that I could obviously have the money to be able to buy some other stuff. So my Rio is the next one that I have here, and they have a 66 out of 100 dividend grade. They're trading right now at $59.10. And if you take a look at the 52-week range, that's at the bottom, so it's kind of a good place to buy in. Rio is actually a really good company in the materials sector. It's one that I kept. I'm keeping my position there. My dividends, on the dividends here, it says the dividend safety is a D. Dividend growth is B-, dividend yield is A+, dividend consistency is a D+. They have a almost 14% yield. So it's a really fantastic. They pay every 6 months. They've had dividend growth for the last 5 years. They've had a 36% growth rate. The payout ratio, I'm not sure, but at least not on Seeking Alpha. I'm not sure what it is. So I kept my position with Rio. It was one of the ones that I decided to keep because they have a good dividend yield, and everything else looks good. So I wanted to keep them. The last one that I have to share with you is SXC. And I'm going to share in a minute what I did with all the money that I got from all the sales of these different positions. I'm going to share with you in a minute what I bought. So stay tuned. Don't go away just yet. So in the SXC is actually a really good, it's got a 64 out of 100. Right now, Seeking Alpha has them as a strong buy. So it's only $7.12, which actually puts them kind of in the middle, lower part of their 52-week range, which is actually a good thing to do if they're on a discount right now. And so it would be a good thing to buy them. So on their dividend, they have a C, C+, B+, and D. They have a 3.3% yield, 36% payout ratio, which is good. 5-year CAGR, is probably not calculable right now. Dividend growth is 0, paying out quarterly. So they're very inexpensive stock to get involved in. So I decided, because they're a strong buy, I'll just keep the position that I had. I had 10 shares. I'm just going to keep it. So I'm not going to continue to buy any more into that. So let me share with you what I did, though. Let me bring this over here. This is actually my Webull account. This is the desktop version of Webull. And so what I did is I looked at the different shares that I have, and I went to the quantity, and my goal is to start to build up my shares to 100. Remember, I was telling you about being able to do covered calls. So I looked here to see what's the next stock that I wanted, and the next stock that I wanted to build up was Intel. One of the reasons why I like Intel is that if you look down here, if you know anything about covered calls, you want to kind of be right around the 20 delta. And the 20 delta for this covered call still gives me $36 in premium. So I'm really excited to build that one up to be able to start selling that as a covered call and to get $36 in premium. Imagine getting 30. And we're only a couple. I know this is kind of a brief introduction to covered calls, but we're already a couple days into the week, and it's still $36. It's the premium for 100 shares. So it's going to be a valuable stock for me to hold. This is going to be a valuable position for me to have to build to 100 and start selling those covered calls every week. If I can sell covered calls every week and make 30 to 50 bucks a week, that's money. That's what I'm talking about. $30 to $50 a week on the covered call for one position. That's $200 a month potentially. $100 to $200 a month. That's really good. I may not be able to do that every week, but I'm going to do it as many weeks as I can and make as much money as I can. And then what I'll do is I'll take that premium and reinvest it back into the next share or the next position to get that to 100. And then with my dividends and my premiums, I'm going to build my shares up to 100 on the next one and the next one and the next one until I have all of my positions at least 100 shares, and I'm doing 4 or 5 or 6 covered calls, making $30 to $50 on each one of them every single week. So you can imagine, I think I can get myself up to $200, $300, $400, $500 a month just with covered call premiums. I don't want to get too greedy. I don't want to get too overconfident either, but I recognize that there's a real opportunity here if I play my cards correctly and I'm wise and I do what I'm supposed to do. So hopefully this was helpful. I hope that you will take the time actually to go and just find me on Facebook under Financial Self-Reliance. Find me on Twitter. Find me on Instagram. Find me on TikTok. I'm on all of those. I'd love to chat with you. I'd love to have you make some comments, and I'd love to hear more about what you're doing in the material sector. What are you doing with your dividend paying stocks? What are you doing with your portfolio? Are you building it up so that you can do covered calls as well? Or are you just building it up right now to be able to have that long-term passive income? Look forward to hearing more from you. If you missed the last video that I did, you can find it here. Go ahead and subscribe up here. And if you want to watch a video that YouTube thinks you might like, go ahead and check this one out up here. Until the next time, have a great day.